small amount of money to invest, and I want to gamble in the market. I'm looking for a penny stock that'll go up and turn it into $100,000 or $1 million.
That's not a good strategy. You're better off conservatively making a 10% profit and then working your way to make it grow 10% more, and so on. We have a great video tutorial on how to play momentum trades to help you grow your money steadily.
I don't care what you say. I want action and excitement. I want to find the next big winner and make huge returns.
What you're asking for is extremely difficult. It will require a lot of research, a lot of patience, and a little bit of luck. I don't recommend trying to do this.
But I know that some companies do go up 10,000 or 20,000%. Can your software help me find these?
Yes. Warning, this tutorial is for extremely aggressive investors only. We will show you how to use our program to find the fastest growing penny stocks on the market. You will learn how to research and analyze a company in 60 seconds. How to cut your risk down by avoiding obvious scams or troubled situations. How to evaluate if this is a penny stock that can make a tremendous move up. And we will show you a proven method for picking the best entry point. There are over 30,000 penny stocks out there. If you follow the instructions in this video, you will narrow this down to a list of 10 or 20 companies that have a solid chance of making a tremendous move up.
Can you guarantee me that this will work?
Of course not, but I guarantee you that you will love our software and how it finds the best stocks on the market.
I'm ready to roll the dice. Where do I start?
Let's start off and see what type of companies actually made these moves. I'm going to run a quick screen. I leave this box checked to eliminate low volume companies. This screen won't find the future winners. This is just to show us what already went up, so we can study the characteristics of penny stocks that did go up tremendously. I'll show you how to work all these controls later on in the video. I set this gauge to over 500%, run the screen, and click this button to export the list to Excel. Okay, now looking at the list in Excel. So last year, there were 136 companies that shot up over 500%.
Why did these companies go up?
They all went up for different reasons. But I already looked this list over, and I can tell you that they all had at least one of these three things in common. They were all selling at cheap prices, and they made at least one of these three signals. But I can summarize what the signals mean just by saying, if you want the big winners, only buy companies at cheap prices.
Oh, I already know how to do that. I just buy the ones that are lowest in price.
That's what a lot of people think, but a low price per share doesn't mean that the stock is cheap. Cheap stocks are companies with low market caps.
What are you talking about? Do you mean to tell me that a stock can be expensive even if it's only selling for 2 cents?
Yes, a stock can be way overpriced, even if it's under a penny. The market cap is the real price. This is what you would need to pay if you wanted to buy the whole company.
Why are you telling me this? I don't want to buy the whole company. I just want a stock that'll go up.
Well, you told me that you want a penny stock that you can invest $5,000 in and pull out $100,000 or $1 million. For this to happen, the market cap must be low in relation to what the business is really worth. Here are the 3 signs that a stock might be cheap: price to book, growth rate, and price to sales.
What do these things mean?
Let's start with price to book. Book value is what the company would have left if you sold everything and paid off all the debts. Assets minus liabilities.
So this is what the company's worth in hard assets, regardless of the business.
Exactly. One sign of a cheap stock is if it's selling for below book value.
I want to know what stocks right now are under 10 cents a share and selling for less than they're really worth. How do I use your software to do that?
Easy. Click on this tab and you get the criteria screener. First, enter the price range. You can put any price range you want in here. This button will ignore the stocks that aren't trading at all. I recommend leaving this one checked. Then move over to this tab and set this range here from 0 to 1. Hit enter, click this green button, and this will give you a list of all the stocks below book value in the price range that you are looking at.
I see there are 15 penny stocks selling for less than book value. Is this updated every day?
Yes. This is the first screen you should look at to dig for a potential huge winner.
Got it. What are the other two signs?
The other sign of a future winner is a company that's growing really fast.
So I should look at how they're growing year over year.
By the time a year passes, the stock will have already moved up. Also, if you look at year over year, it would look like the company in this example is growing when you can see that the growth has already stopped. And it would look like this one is not growing.
I see what you mean. I need to find the companies that are growing quarter over quarter. Show me how to use your software to find this.
Easy. Go back to the criteria screener. Enter your price range in here, and then move over to this section and set this slider right here for sequential revenue growth. I'm going to enter 10 in this box. This will show me the companies that are growing at least 10% quarter over quarter.
So this little list is the fastest growing penny stocks on the market. Let's look at one of them.
Sure. To get more info, just click on the symbol. This one sounds interesting. EWSI. E-Waste Systems, selling for 4 cents per share. Let's click on that. You can see here the company's growth. If you hover over it, you get the actual numbers. It looks like they did 0 in the fourth quarter of last year, then 229,000, then 2.7 million. Something is happening at this company.
Does the company need to be growing in sales in order for the stock to go up?
Not always, but it's one of the signs that some big winners had. If you're serious about finding the next big stock, take a look at this list every day. It's a fantastic starting point.
Got it. Show me the third sign.
This one is just as important as the other two, price to sales. It tells you what the market cap is in relation to how much sales the company is doing.
So if the company has 100 million in sales and I can buy the whole business for 50 million, it would be cheap.
You got it. Let's do a quick screen and find which penny stocks are selling for less than 1x sales. Go back to the screener. Click this button here to clear out everything that we had. Enter the price range, and to get the company selling for less than 1x sales, just put a 1 in this little box right here. Hit enter, press the green button, and there's your list.
Cool. I think I saw SKTO on the other list.
Yes, it was on both of them. That means that it's not only growing fast, but it's also selling for less than 1x sales volume.
Show me this company.
Sure, just click on the symbol. So in the case of this company, it's selling for a market cap of just over $1 million. You can see here that the sales went from 0 to 5 million to 13 million. If they keep growing at that rate, they'll do 50 or 100 million in sales next year. $1.2 million to buy this company looks like a really cheap price.
So all I need to do is find the fastest growing companies or the ones at the cheapest price and I can make 1,000%. That sounds easy enough. Is there anything else I need to look at?
Yes. You need to eliminate the companies that are about to go out of business. And if you're looking at penny stocks, you need to get rid of the ones with signs of a scam.
Can I use your software to do that?
Yes. Here's how you find the pitfalls and eliminate the bad companies from the list. Most important, do they have enough money to operate the business?
Why is this important? If they have a good story, they can always get money later.
True. But of all the stocks that went up over 1,000% in the last year, there wasn't one of them that didn't have at least $250,000 in cash. Having some money in the bank shows you that someone other than you has already bought into the story.
Oh, do you mean to say that the companies that had great ideas and no money had no real investors backing, so they went nowhere?
Exactly. All of the stocks that made huge moves already had at least $250,000 in the bank.
If I buy a company that has $250,000 in the bank, will the stock go up 5,000%?
No. But if they don't have at least $250,000, I can tell you with 99% certainty that they have no chance at all.
So you mean to say that if a company has no money in the bank, the company will most likely go bankrupt?
Duh.
Can I use your software to find out how much money the company has in the bank?
Yes. Just enter any symbol in this box and then click the View Complete Report button. The amount of cash that they have will always be shown right here. Here's how you avoid pitfall number 1. Only buy companies that have enough money to operate. We like it best when the company has $10 million or more in cash. I've even seen $1 stocks where there was over $1 billion in cash. And surprise, those were all winners. But these stocks are rare. $250,000 is the absolute minimum that you should look for. But of course, the more, the better. Now let's talk about pitfall number 2. Only buy companies with no debt.
What's wrong with debt? I just got a hot email tip on a solar company. It came from pumpingpennystocks.com, and it says, these guys will change the world. So what if they have debt? I need to jump in now so I don't miss out on the opportunity.
Going back to that list of stocks that actually did shoot up huge, none of them had long-term debt.
Do you mean to say that the companies that went up huge were in good financial shape?
Yes, and I can tell you something else. All of the companies that went bankrupt because they couldn't pay their debts. Look, this really isn't rocket science here, and you don't need a degree in accounting. There are 30,000 public companies. The number one responsibility of every public CEO is to pitch his company to investors and get capital. That's why they went public in the first place. The best companies get an equity investment with no strings attached. These are the winners. Example, a company lands a $5 million investment for 25% of the shares in the business. No debt, no future payments, just investment for stock. That's what you want to see.
So I should try to buy what the pros are buying.
Yes. The weak companies are rejected by professional investors. They are going to need to go to some type of loan shark and borrow money. And everybody knows what happens when they don't pay back the loan shark.
I think I'm starting to get this. Can I use your software to check if a company has any debt?
Yes, just enter the symbol in this box and then click on the View Complete Report button. The amount of debt they have will be shown here and here. For short-term debt, this could just be unpaid bills. It's okay that something shows up, but this number should never be higher than the cash. For long-term debt, this number should always be 0. If it's not, it can only mean that every professional investor they ever pitched rejected them. You should reject them too. Here's how you avoid pitfall number 2. Don't buy companies that are heavily in debt. The company should always have enough cash to pay their bills and never have long-term debt.
Money in the bank, no debt. I get it. Are there any other pitfalls I should know about?
Yes, let's talk about the worst one of them all. Pump and dump, the biggest sign of a scam. These always fail.
That sounds pretty bad. How do I know if a stock is a pump and dump?
Easy. Open up our Penny Stock Monitor program. Click on the Search tab. One of the stocks that seemed to have a good growth was e-waste systems. Let's enter in that one and see if there are active stock pumping campaigns going on. Just type the symbol and click the search button.
I see the company name right there and the day it was last promoted.
That is not good. Let's look a little further. Just click on the name here to get the full history.
I see lots of pumping. December 9th, November 28th, November 4th.
We have been telling investors to avoid pumps for years. If you look at this link, you will see that 98% of the pumps we warned people about failed. Pay close attention to what I'm about to tell you. If the stock shows up in Penny Stock Monitor as a paid pump, there's a 98% chance this thing will tank huge.
But isn't it okay if there's just a little bit of pump and dump emails?
OTC stocks are too high risk.
It's a pump scheme, message.
Promoted OTC stocks are even worse.
They're all scam.
Okay. I don't want to get suckered into a pump scheme.
Good. Here's how you avoid pitfall number 3. If you see any pumping activity in the last year, do not invest in this stock. Not for any reason, under any circumstances.
Okay, so this narrows my list down even further to just 2 companies. They're good at valuations, they're growing, they have cash, no debt. Should I get in now?
Maybe. But it's possible that you found this great undiscovered stock, and it's just going to sit there for 6 months doing nothing.
I want to buy it right before it makes a move up. Can I use your software to find out if it's about to make a move?
Yes. There are 2 signals that work the best on penny stocks. The absolute best time to buy is in the middle of a panic. All it takes is one bad day in the market or a big seller pushing the price down. Buying in a panic produces the largest returns. But on a good company, there might not be a sell-off, and you may never get this chance.
So what's the other best time to buy?
The other best time to buy is on a technical breakout, preferably a fresh new 52-week high. We have a whole other video tutorial that explains why this works. Buying on a breakout produces the fastest returns. Both strategies will work.
Show me how to use your software to find these signals.
A panic will be marked by hitting the bottom range of the Bollinger Bands and slow stochastics at the same time.
What?
Don't worry, this is easy. Let me just show you what it looks like on a chart. I'm pulling up a 1-year chart on medical marijuana. Now, I mentioned the bottom range of the Bollinger Bands. Bollinger Bands show up on all the charts in Hotstocked Precision by default. They are these 2 purple lines. The range you want is any time it's below the bottom purple line. But that isn't enough. The slow stochastics must also be below 10.
But what are slow stochastics?
To get those in the chart, just click on Indicators and then select Slow Stochastic. You can hover to read the number. This number must be below 10, and the stock must be below the bottom purple line here. Back to the example. Every time MJNA was in this position, it was usually right before a nice move up.
5 signals, 80% accuracy, looks like a nice trade setup. What does the other signal look like?
The other signal is to buy right when it's at a brand new 52-week high. Again, please watch our other video tutorial on how that works. But you can see here, with medical marijuana, it only made this signal 3 times in the last 5 years. The signal was not as often, but the moves up were big and extremely fast.
Neither of the stocks I like are making a buy signal, but now that I've researched them, I want to watch them and wait for the perfect time. How do I track them with your software?
Easy. Click the Portfolio tab, click the Add New Portfolio button, make up a name for your watch list. For this one, I'll just call it Crazy Penny Stocks. Then just start adding the symbols you want with this box.
Got it. I have them on my radar. Now I can wait for the perfect time. But I want to trade something now. I like those signals you showed me. Can I use your software to find if any penny stocks are making these chart signals today?
Yes. It's better to wait and buy the best companies. But if you just want to make quick trades based on the chart, here's how you can look that up. For a list of penny stocks in a panic sell-off, first, hit the reset button to clear the screener. Then, set the price range to whatever you want. I'll just put in 1 to 10 cents. Set the Bollinger Bands to 1 and 1. This will only find stocks below the bottom purple line. And then, set Slow Stochastics from 0 to 10. This will get the bottom of the Slow Stochastics range. Click Submit Query, and there's your list of stocks between 1 and 10 cents making a sell-off signal.
What about for the stocks with the new 52-week high?
This one's even easier with our program. Click on the screener menu, click on penny stocks near 52-week high, and it's default sorted by highest probability.
But the best one today costs $6. I want something under $1.
No problem. Click here to sort by price instead.
Should I buy one of them?
Research them first. You know how to do it.
Let me see if I remember everything correctly. First, only buy companies with low market caps in relation to their book value or sales.
2. It's best to buy companies that are growing very fast.
Avoid companies with no cash.
Avoid companies with heavy debt.
Avoid pump schemes.
Wait for the perfect moment to get in. Either buy on a panic or buy when you see the momentum starting to kick in at a new 52-week high.
You don't want to get stuck in a stock that does nothing for 6 months.
One last thing. Use the feedback form to contact us. We love to hear that our users are making money. Tell us about your profits. Ask us a question, or tell us anything at all. We want to hear from you. And now, go make some money.